Welcome to this edition of Dynamic Market Updates, a deeper look at what's happening beneath the surface of markets and why it matters. As you've likely seen in the news, U.S. forces detained the Venezuelan president on charges related to drug trafficking and corruption. President Trump stated that the United States will run the country and work to expand Venezuela's oil production. While the humanitarian implications are most important, you may naturally wonder what this means for markets and the economy. Over the next few minutes, we'll explore three key areas. First, the historical context of geopolitical events and markets. Second, the potential impact on oil prices. And third, Venezuela's minimal role in global financial markets. First, it may help to start with some historical context. The U.S. has long viewed both Central and South America as its backyard, so it has a history of active involvement in the countries of the region. The current Venezuelan regime has been deemed problematic by various administrations, so the latest actions are an attempt to crack down on narco-terrorism. At the same time, oil is a motivating factor as well. When we zoom out, we see on this chart that geopolitical events often create short-term market volatility, but their long-term market impact tends to be limited. This is because these events don't typically change the direction of broad economic drivers. We've seen this pattern play out in recent years with conflicts in Ukraine and the Middle East. Now let's turn to oil prices, which may be the most consequential issue for investors because the primary channel through which geopolitical events affect financial markets is through commodity prices. Venezuela is important here because the country possesses the world's largest proven oil reserves. However, despite these vast reserves, Venezuela produces far less oil than other countries. Over time, increased Venezuelan production could benefit U.S. oil companies and place downward pressure on oil prices, assuming nothing else changes. But the real world is rarely that simple. Financial media often focuses on single factors to explain market moves, yet commodity prices, just like all investments, are influenced by countless, constantly shifting variables. As a result, one should not assume oil prices will fall based on any single development. That is why we emphasize preparation over prediction, being ready for a range of potential outcomes rather than relying on a single forecast. Finally, the key fact for investors is that Venezuela plays an insignificant role in global markets. Its stock market is small and illiquid. For example, it's not even included in the MSCI Emerging Markets Index. In the bond market, Venezuela has actually been in default since 2017 when it missed important payments. So most investors have minimal or no direct exposure to Venezuela. The situation will continue to evolve, and there may be additional developments in oil markets that capture market attention. The bottom line is that the arrest of Venezuela's president represents a significant geopolitical development. However, history shows that diversified portfolios built with multiple drivers of return focused on long-term financial goals can navigate geopolitical uncertainty. I hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach towards asset management, feel free to download our white paper. You can click the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Be sure to like and subscribe so you stay up to date with future insights. Until next time, take care everyone and make smart, logical, and fact-based financial decisions.